record. Oh.
And Melissa, you want to go ahead and start?
All right. I just want to make sure. Okay, I did hit approve. Okay. Welcome everybody to our dollars and cents class. We're happy to just see so many people who signed up first. I think it was our largest, almost our largest sign up. And we're hoping to help all those who are here with just some kind of basic knowledge that we have found useful. I'm Melissa Evans, and I've been working at Community Investment Corporation for 8 years. I'm part of the finance team. Prior to that, I was a math teacher, so numbers just kind of seemed to be my thing. And with me today is my leader, Betty Vinall. And do you want to say a little bit about your background, Betty? It's a lot more.
Sure. Yeah. So I actually have been with CIC for 20 years, starting as a contract bookkeeper. For those of you who have new small businesses, both Melissa and I are self-taught accounting people. So I've worked with a lot of different small businesses over the last 30 years, and then have now become a full-time employee in the accounting department at CIC. But we're hoping that some of these skills that we use to keep our books straight will help you. And it's kind of the way when I was working as a contract bookkeeper, I taught people how to organize their finances. So we're happy to have you here today.
So we're going to talk a little bit, just give you a little summary of what community investment, what we do, and our goals. We are a financial empowerment nonprofit. We focus on 3 areas, 3 pillars: home ownership, entrepreneurship, and education. And home ownership, we have a couple different programs. We have a down payment assistance program. We have the mortgage credit certificate program. And through the education, we have myschoolstucson.org. Anyone who knows, who has kids or know people who have kids, that's a great resource for finding the right education path for their student. Bond compliance team, and some lending for charter schools. Today's focus is kind of through our entrepreneurship pillar. The lending department, we focus on providing access to capital for those small businesses that are not ready for the traditional financing system, either because they're too new for banks or the amounts that they would like to borrow is too small for the traditional banks. And part of that is just this education piece of how do you get your books ready for a loan, or how do you look at your books or get books, I guess. Set up books is even the first piece. So yeah, so we're here to help, and we're hoping that this class will help you with wherever you're at and with your business. So we're going to start off a little bit, and we've usually taught this class in person, so we're hoping that we can get the same cooperation in Zoom. And if we can just start by learning a little bit about what your business is, if you can drop in the chat the name of your business, and if you can share what best describes your business. Is it a retail business like jewelry, or a storefront for purses? Is it a food service business like a food truck or a small restaurant or catering? Is it a professional service? Like we've seen some IT startups, massage therapists, barbers. If you could just throw that in the chat so that we can all see kind of where we're all coming from, and that might help some of you also connect outside of this meeting. And I'll just give a few minutes, or a minute or two, for everyone to jot that down, and so that we can all see it as well.
This is fun. These are businesses we haven't had before.
I know they're all very unique. That's what I was just going to say. Very good. Well, as you guys are doing that, another kind of different part that we want to also kind of find out is what stage your business is at. Are you in the early stage, which I can kind of see that some of you are probably past the early stage? Um, have have you launched it but still needs customers? And are you at revenue? So some of you kind of answered that by how long you've been doing it. But if you just want to follow up with that, are you in the early stages? Have you launched but still need customers? Or are you at revenue? This is awesome. So launched and kind of finding customers kind of seems to be kind of where most of us are at. And I will say that, we kind of asked you to share this in the chat just so that you can see who else on this call is at a similar stage or has a similar type of business than you. And, if you want to in the chat directly and get each other's contact info just to have another resource or another friend out there in this world, feel free to do that. I think the more people you talk to and share experiences with each other, the easier it is for everyone.
Okay, so we're going to go ahead and move on. And I do want to tell you, as we have the class goals up here, we will share the PowerPoint at the end of the class, so you don't need to feel like you need to have to write everything down. So here are our class goals. We start by saying we want you to be able to move beyond your bank balance as a primary tool for managing your business. I want you to be able to understand the key sections of all the financial statements. And we'll spend a lot of time on how you organize your data to get your information. So we'll talk about revenue, expenses, cash, and credit, understanding where your money comes in and where your money goes out, and understanding how you track your personal investment in your business. So we're going to start with banking. And one of the things that I always say when I'm helping somebody set up their small business, most people are starting as an LLC. It's just you while you're getting it off the ground. And there's oftentimes you're paying for things out of your personal checking account. To really get the best financial statements, we strongly recommend that you open a separate bank account for your business. For one reason is it helps you keep your personal and your business expenses separate. And that will, in the end, help you not make errors on your financial statement. It also is the best way to get a clear vision of what your cash flow is in your business. If you're depositing your income into a joint or a mixed account, and maybe you still have a W-2 job, it's really difficult to actually understand how much money you're making in the business and how much you're spending on the business. It also really helps you create reports if you are not a business that is using accounting software yet. And it helps you to identify missing payments. If you log in every morning and you look at your personal account, you see what's going on, whether a paycheck deposited or you made a deposit on your phone, and then you look in your business account and maybe you did a pop-up 2 days ago and your POS hasn't sent that deposit to your bank. The easiest way to keep track of that is by having 2 separate accounts. So when we talk about banking and the information that you get when you look at your bank statement, the real first part of it is it helps you understand your cash flow. So if you log on in the morning and your bank balance in your business account is $10,000, then you can give some thought to it. Have a pile of bills over to the right side, and you can figure out what the dollar value is as the money that you owe out. And you have an idea of where you are with your cash flow. Do you have extra money in your business, or perhaps are you going to, as the owner, have to invest a little bit more money in your business? It also, we'll talk a little bit later on about payment processing reports, but by checking your bank balance and checking your payment processor, you are able to see that all of the money that you are expecting has deposited into your account. It's a really good double check for seeing where you are with your revenue, but not all deposits are revenue, and we will talk about that later. And then just by checking on a regular basis, it helps you identify if there's any fraud on your account, which seems like we all have to check everything these days. So right now I'd like to talk about how you receive payments into your business. And all businesses are different. So some businesses are accepting cash. There are some that don't accept cash. Checks, I don't know that many are accepting checks now, but there are still checks. There are a lot of payment apps where you can receive your money, whether it be Zelle, Apple Pay, Venmo, PayPal. And then credit cards, if you're accepting credit cards and you're using a service like Square, Shopify, Stripe, other credit card payments. So if you want to just kind of jot down or think through that on your business, that would be great, just to identify what it is that you are using. And then we want to talk about how you spend your money and pay your business expenses. This is an area where you may use checks more than in receiving checks. You may use ACH from your business bank account. That is a nice thing to have if you have your business bank account where you're setting up some of your vendors to be paid by ACH. You may be using credit cards to buy supplies and pay your business expenses. And some businesses actually use the payment app that they use to collect their revenue to also pay some of their expenses. So they're almost using the payment app like a bank account. So real quick, if you would just in the chat, if you would drop in what the top two methods you use to receive money and the top two methods you use to pay your business expense. Okay, when we're talking about organizing your business, one of the things we want to talk about, or we have these 3 questions that we'd like to review with you. One is how you know your end of period profit. Where do bank transfers come into play? And where does your bank balance come into play? So we'll look at these one question at a time. So how do you know your end of period profit? Well, the one thing you'll learn in this class is it really all does come down to organization and how you organize your financial information. So through banking, you will be able to identify all of your revenue. And what I mean by that is by looking at your bank account, you should see deposits from, if you are a storefront, if you're depositing every night, you'd be able to see your revenue that way. If you go to farmers markets or other pop-ups, and then you would check and make sure that the full amount had deposited for that day. You will see cash, check, payment, credit cards, all of those will come into your banks in a different way. And then you have your business expenses that you pay. And your business expenses, as we said, could be paid by check, ACH, credit card, and payment apps. Okay, so an end of period profit could be your profit for the day, or it could be the week or the month or the year. And in general, your end of period profit is all of your revenue minus all of your expenses. If your expenses are larger than your revenue, then you do not have a profit. So we also want to talk about where bank transfers come into play. In general, bank transfers are not revenue. And this is one of the things that the small businesses really need to understand, that if you are putting money into your business, it is not revenue. It's really like you're loaning money to your business. So all personal contributions to your business are owners' contributions for money going in and owners' draw for money coming out. So if you've had a really successful month and there's an extra couple $1,000s in there and you write a check to yourself, it's not a business expense, it's a draw, and it just is an in and out account of what an owner puts in and takes out of a business. And the last thing is, where does your bank balance come in? And again, your bank balance actually only does not determine your revenue. It's really just helping guide your cash flow. So you never want to use your bank balance as your profit or a revenue number. It is just the amount of money you have available to continue to work, operate your business. So as we said, organization is the key, and all the money that runs through your business, whether it be your bank or your credit cards, you have to have the detail. So your bank statement and your credit card statement are what gives you the details to know your revenue and your expenses. So we're going to start with revenue, talking about revenue first, because we all like to make money. We've identified all of the ways that you collect your money, but now we'd like to get an idea and a picture of your actual sales. There we go. So what you need to do when you are setting up your books is really think about how you want to track your sales and what information you need as a business owner. So you may want to track your sales and create items. A business that might do this would be like a retail store or a restaurant or a manufacturer. So like in a retail store, you might have women's jewelry, women's clothing, women's shoes. Then men's clothing, men's shoes. That's tracking by item. You might want to track by method of delivery. So some businesses really want to know, are they selling like at a farmer's market, or are they selling online? So that's another item, the way you can classify your items to get information on your profit and loss. And then the third type is tracking by employee. So like if you're a bookkeeping company or an IT company or a landscaper, you may want to know how much revenue each employee is bringing into your business. Along with that, you could still have tracking by item. So for example, if it was a bookkeeper, you could track Sally as the person, and then you could track the amount of revenue she brings in doing monthly books, doing quarterlies for payroll, closing out a year, whatever items you want to know that person is doing for you. So take a little bit of time here and think about your business and decide which of the methods of tracking revenue work the best for you. Okay, so you want to get an accurate breakdown from your payment processing reports of what is actually the revenue part of the sale. The full amount that's deposited into your bank account or into your payment processing system is not all revenue. You will have the revenue of the item that you sold, but there's probably sales tax or maybe sales tax. There may be other fees. There might be a fee from the payment processor that's added in there. There may be delivery fees, and there may be tips. So revenue tracking is key when you set up your books. You need to make sure when a deposit comes into your bank that you are separating out all of these fees. The easiest way to track your revenue is through a POS or point of sale. These two are hyperlinks, and they will take you to articles. When you have this PowerPoint, they will take you to articles for the best way, the free payment processing service, and then also the actual hardware that you can use. For example, if you're using Square, and then if you're using a handheld or a desktop or a tap, those hardware pieces. In the payment processing, the other part that's really important is that you understand how to get the reports from your payment processing service that you're using. So a lot of times, we've helped some small business. A lot of times, some of the reports that you need are kind of buried. And when you go in to set up that payment processing system, you need to make sure you're setting up your revenue accounts as income and your expense accounts as expenses. And if you're collecting sales tax, that would be a liability because you owe that to the state. So that is really the most important step when you start with your POS system. So the last part of revenue collecting that I want to talk to you about is the difference between a sales receipt and an invoice. So sales receipts are for sales on the spot. And if you are running a business where you're selling an item, you most likely are using a sales receipt. Invoices are actually used when you are billing a client but delivering the service at a later date. So sometimes that would probably work for most people who have businesses where they're tracking their sales by employees. You need that employee to come back and log his hours, and you need to add any other information to that invoice. In billing by invoice is a little bit more complicated than billing by sales receipt. And the main reason is you have to make sure that you're tying the invoice and the payment received together. If you don't tie them together correctly, it's easy to make it look like your business has more revenue than it does. So it's a step that you need to really pay attention to. It also is important to pay attention to the open invoices because that lets you know money that is supposed to come to you in the future. And it gives you an idea if you have a problem where you need to collect on someone who hasn't paid timely. It also, if you are like applying for a loan or credit, you're able to say, well, this is my profit to date, and I have receivables of X number of dollars that I expect in within the next 30 days. So that gives you a little bit more information in looking forward in your business. When you have a business that operates on sales receipts only, you really can only say where you are today. You could tell someone, well, I do have 3 trade shows coming up and I expect that I will make this much money, but it's not actually in your books. It's just a projection that you are showing as a business owner. Okay, so now we're going to talk about tracking your business expenses. And business expenses all start with receipts. Not everybody actually collects their receipts anymore, but they do give you a lot of information about how you're spending your money. So let's take some time to understand your expenses and how you track your expenses for your business. There are many reasons that you need to keep track of it on an ongoing basis. One of them is you may just want to keep track of a category. For example, you may want to know how much money your employees are spending on gas, or you may want to know in terms of if you're ordering supplies, you may want to know how much you're spending each month on those supplies. Areas that are critical to you, you need to be able to have good expense categories so you can see where you are in your business. The other reason you want to track your expenses is have a plan so that your expenses line up with the 1040. Most small businesses, when you start out, are an LLC. And when you're an LLC, you report all of your business expenses here on Schedule C of the 1040. So that's a part of your personal tax return. Now, if any of you on the call are corporations, there's a different process. You file a different kind of tax form. We really aren't going to talk about that today, but I will tell you that all of the expense categories that are on the 1040 transfer over to running a corporation. So when we talk about expense categories, we're going to go through some of these here. And this first part is just so you're used to seeing what it looks like. As you can see here on line 27A, they do have a line called other expenses. And right here is a list of some of the categories that you would be able to, on a separate paper within your tax return, you could add like how much your bank service charges were, computer expenses, merchant fees. Those are things that the IRS does not list on the 1040, but they are a business expense, so they do get subtracted from your revenue. Other professional fees, paying your accountant, shipping and postage. So we're going to move over here, and as we go through this, what I would suggest is you actually think about what are the expenses that are important to your business or that you actually are using in your business. So I'm going to back up here first. Maybe. Yeah. So first, let's talk about these other expenses first. I would, at this time, if you have a piece of paper, I would jot down any of these other expenses that you use so that when you're building your chart of accounts and your expense accounts for completing your tax return for 2024, you have identified that you are going to track some of these other expenses. And I'll give you just a minute to look at those.
And Betty, I'll ask a question that some of the people might be asking, because a lot of them are using Square or Venmo. If those platforms are charging a fee, would those go under bank service fees? Would that be considered?
It would go under the credit card merchant fee.
Okay.
Yeah.
So that might be something of interest for some of you who are using all these different apps, is to find out how much you really are spending on all of the credit card merchant service fees, just to see which one maybe is of best value for you.
Absolutely. Absolutely. Because some of them are charging a per transaction fee, and some of them are actually charging a monthly fee too. So, okay. And then here we are in the 1040. So this gives you an idea of what the information you're going to need to complete your tax return. So you're listing your revenue at the top. You can subtract returns. Some people subtract the returns within their POS and they don't have a return line. But in general, you're going to get down to the gross revenue or gross profit of what you sold last year. Then you're going to look at your expenses. So I'm sure most of you do some form of advertising, even if that's just printing that you hand out, that can be advertising. You can track your car expenses. The IRS has a mileage amount that you can use. There are some things that you won't use at all. Commissions or contract labor, depreciation, those don't apply to every business. Insurance, hopefully you have some liability insurance at least. Office expenses, rent, if you're renting a storefront, supplies, deductible meals, those have their own rules. Utilities, if you have a storefront, and then the other expenses. So the way it works on the 1040 is you actually add up all those other expenses that are on the extra page and you list them here under 27A. And then you get your total expenses and you subtract that from your total revenue, and that is the net profit that you are going to put on your tax return. So does anyone have any questions on this part? I see mileage and travel. So yes, there's both. So if you have a business where you're keeping track of your mileage during the year, that you can put under mileage. And then travel, if you have to travel for your business, if you go to a show or something like that, or you go to market, those are the travel expenses that you can list under travel. Another section of the financial statements is cost of goods sold. So let's talk about what types of businesses need to track cost of goods sold, or it's a good idea to track cost of goods sold. So if you sell products you make, for example, if you are a t-shirt company, under cost of goods sold, you would want to track the price of the t-shirt, the expenses that go with screen printing, and if you embroider, the expenses that go with monogramming. And then those would all be tracked under cost of goods sold, not under business expenses. If you're a restaurant or a food vendor, so you might want to track the food that you sell, and then the non-alcoholic drinks and the alcoholic drinks, so that you have an idea of which products are bringing in your revenue. The reason you track it as cost of goods sold and not as a general business expense is so that you can tie it back to your sales. So an example would be if you are a restaurant and you are tracking through your payment processing system, you track the meals sold, then you can look at the meals sold versus the cost of goods of food that goes into the meals. Same with the drinks. You track them and then you track cost of goods in the same manner. And when you do that, it gives you the ability to see if an item is profitable or not. So it gives you a really clear picture of how your business is doing with the items that you are actually selling. And another thing that you can think about is deciding what you're doing on wages. And businesses handle this in different ways. So, for example, on the t-shirt company, if you have an employee and all of their work, all of their hours go to the screen printing or production of the t-shirts that you are selling, you might want to track that employee's wages under cost of goods sold. Whereas your wages or your manager's wages, the person who is doing other things besides manufacturing, is actually tracked under your general business expenses. It can be done either way, and businesses treat it in different ways. So it really is how you want to see something as a business owner.
Okay, I think this is when we switch and give Betty a little break. So we've been talking about, the bank account and the credit card. And so this is an example if you use a credit card and you use it only for your business. transactions first, and so that's something that we would highly recommend. And so when you are using that, something important to remember is the payment for that credit card, your monthly payment, that is not an expense within itself. Instead, it's a summary of every payment you made or the purchases you made for that month. And so when you look at your credit card statements, that is where you're going to get the detail for your expenses. And so some of you have already figured out that whatever system you're using, you can pull reports either on a monthly basis or whichever way you want to do it, weekly, quarterly. Monthly seems to be the easiest, I think, for most people. So we're going to look at a sample credit card download. Most of them will download as a CSV file, and most of you have probably learned that you can open that in Excel if you have that on your computer, or in a Google, you can download it into Google. All right, so here's a sample credit card download. And so, everyone's might look a little bit differently, but all of them are going to give you what card was used, the transaction date, the post date, a description that came from that payment, and the credit card company will categorize it for what they think is an appropriate category for the expense, and then the amount. And so for us, we're trying to focus and make sure we have our books in order to match the expense items that Betty was just talking about on the 1040. So these categories are not, food and drink is not on the 1040 as an expense. Gas is not there. Shopping is for sure not going to be one of those categories. So for us, we're going to download this. We're going to download our credit card description, and then we're going to add an expense tag. So I don't know how many of you are familiar with Excel and at what level you are. So I'm going to kind of go into detail. It might be boring for some of you, or it might be helpful for those who don't use Excel. So I'm just going to add right next to it an expense column. I'm going to just title it expense or expense tag, whatever you want to do. And then if this is your credit card, you will know what you did or what these expenses were for. So for instance, if you had a mix up and one of these expenses was not for your business, then you would want to tag that. For instance, Trader Joe's, let's say you stopped and got groceries and used the wrong credit card, you would probably want to note that not business related, or however you want to take that out of it. So let's assume we didn't do that. We had our A game together. And so let's go through this, and we're going to use the expense tags that are listed on the 1040, either in the main section of the Schedule C or in the other category. So for Chato Vida, I'm going to say that was meals. For Trader Joe's, I'm going to also say that was for meals. Fries, we stopped and got gas, so I'm going to use car. I think on the Schedule C it says cars or car truck expenses. Staples, I'm going to say that's for office supplies. I'll just put office to be quick. UPS, we're going to use postage. Blanco, we'll say meals again. Walmart, here's one that it would be helpful to keep the receipt. I know a lot of us don't keep receipts anymore, but this could go either way. This could be meals because you bought snacks and stuff for an event, or it could be supplies because you bought supplies that you needed to either make your product or to set up your business. It's also a return. So whatever category you put it in, it is we're going to put that with that category. So I'm going to go ahead and say that this was for supplies. Circle K, again, is going to be car. Farmers insurance is kind of basic. It's insurance. Fries is car again. This time Walmart, let's say we did meals. Insurance again. Chili's, meals. QT, car. Honda, car. UPS, postage. And once you have listed all of all the expense tags and you've gone down the list and you've figured it out, and we're now going to sort by expense tag. So I'm going to go ahead and just highlight the appropriate cells. And on the top, if you're in Excel, the top right-hand column, I'm going to go to sort and filter. I'm going to click on the down arrow. I'm going to go to custom sort. And you'll get this new little window. And you'll notice that I have this little box checked where it says my data has headers. So I have that checked so that when I click on sort by column, my column headings are there. If you don't have that checked, just so you guys can see what it looks like, you'll see that it just says column A, B, C, D, and so on. I like to see my data headers just so I don't make a mistake. And I want to sort by the expense. And then I'm going to press OK. And so now we've sorted by expense. So now you can see that all of the car expenses are put together, all of the insurance expenses are put together, and so on. For you to really know how much you spent on the car, how much you spent on driving and making sure it's maintained, you're going to do a subtotal. So I'm just going to enter an equation to the right at the bottom of car equals, and I'm just going to do a sum equation, SUM, open my parenthesis, and I'm just going to select the cells I want to add because I want to know what is this total to. And then close your parentheses and press enter. And you'll see that we spent $347.03 on our vehicle to travel to the different markets, to pick up supplies, whatever it was used for. You'll also notice, I don't have this in full screen apparently, that at the bottom of the spreadsheet, if you have the cells highlighted, you can see that the sum is also shown on the bottom. And there we go. So you can see the sum is down there. I would always advise to do a formula so that you have it there, and when you're going back and forth between your POS system, you can enter it correctly. And then you would just do the same for each expense tag. So sum, how much do we spend on insurance? And then, a big one has always been meals. So similar idea. So you will see that that's what you have. So that's kind of how you would use your credit cards download to help categorize the different expenses. Similarly, you can do the same with your bank statement or your bank activity. So if you go into your bank and you go, however often you want, once again, you can download the activity. So here's a sample that we also have, and we just want to kind of talk a little bit about what this all means and how we can use it for our small business. Now, again, if you're using one account for your businesses, this will be a little bit more straightforward. But if you're mixing, then you are going to have to go in there and label what is personal versus what is an expense or a business related. So the first thing I want to look at is these yellow highlighted rows that have deposit on them. So it is important to know that there was a deposit of $2,100 and a deposit of $966. It's really up to you to know what was that a deposit for. You need to remember what happened on 9/10 or before that, and what was that deposit? Was it for? And then you need to categorize it. Was it for? Did you get paid for appearing and selling something? Was it from a sale? What was that deposit for? And so that way, when you enter that into your POS, you can label it appropriately. And were there fees taken out of that? Like, did you really make $2,200, but when you add all the fees, the fee was $100. So you do want to also make that notation, and then you're going to add that as your expense for that fee. The blues are also important because this ties back to our transfers. So as Betty said, when we transfer money in, so on 9/12 and 9/16, it looks like we transferred money in 2,000 and 3,000. Those are not going to be revenue. Instead, that's mostly going to be an owner's contribution. That's money being put into the account to cover whatever expenses are coming up that maybe you don't have enough in the bank to actually cover them at the time. Like maybe you're waiting for a payment from an event you did, and so you need to move money from your own personal account to cover it until that comes in. And on the other side of it, we can have an owner's draw. So it looks like on 9/1, there was a transfer out. So maybe that's you paying yourself back for your contribution that you made the previous month. And so that, again, that's not going to be an expense, right? That's just the owner's draw. So it is important to go through all of it. And you can also know that I don't have the spreadsheet open, but you would do the same task of writing an expense, adding an expense column and going through it. So Denny's is going to be meals again. Circle K is going to be car. And so you're going to go through the same process of labeling what each item is.
Perfect. Thank you. So now let's tie it all together with the financial statements that each business needs to understand and be able to produce. So the first thing we're going to do, and we've kind of been talking about it all morning, is you're in the process of building your chart of accounts. So your chart of accounts has, as you can see here, assets, liabilities, and equity make up the balance sheet. So assets are what you own. So that is the funds that are sitting in your bank account or your savings account. It's equipment. And there also there's equipment that you've purchased, and you can also have equipment that is on your balance sheet by contribution. I want to take a minute to talk about this because a lot of small businesses start by, for example, let's just say you're a food truck vendor and you personally bought the food truck before you really got the business started. Well, the food truck really needs to be listed on your business balance sheet. What you will do is you will add it to the balance sheet as an asset. And instead of the offset being a checking account or a credit card, it is owner's contribution. It's you paid for it. And now that asset is on your balance sheet. That happens a lot. I mean, a lot of you have bought sewing machines, you've bought lawn equipment to start your business, you've paid for it yourself. So that's the way you get those assets onto your balance sheet. The second part of the balance sheet is the liabilities. For most small businesses, that would be where you would carry your credit card balance and a loan balance if you have taken out any loans. And the third part of the balance sheet is equity. So equity is what we're talking about, the contributions that you've made, the draws that you've taken out, and your current net profit. One thing to know about the balance sheet is it is truly just a screenshot in time, right, of the day that you're doing it. So we do have some templates on our website, and we will give you links if you are not using accounting software, but you can build your own balance sheet at the end of every month. And so you will be tracking your bank accounts. If you have inventory, that would go there. If you are billing by invoice, your receivables go on there. Liabilities, like we said, most small businesses, it's credit card and loan payments. And then at the owner's equity, you would be adding what you've put into the the business, what you've taken out of the business, and what the net profit for the period is. And that would be a balance sheet that you could produce and show for your business. When we were talking about expenses and revenue, those items go on your profit and loss. So again, we have created a template that you can use if you don't have your books organized for last year. Depending on how much activity you had, you could go ahead and break it down into the months, or you could use this to guide you and do it at the end of the year, an annual amount. So you would identify, you can change these categories. You would identify the different areas of revenue if you're tracking by item or by person or by method of delivery. You would be able to track your cost of goods. And then you could go through, when you take all of the ways that you spend your money, and you could put the total in of all your various expenses. So when you take your revenue and you subtract your cost of goods, that gives you your gross profit. If you're looking at really getting an understanding of how much money you're making from the goods you're selling, this is the part of the financial statements where you will see that. And then you have your operating expenses. So that would be your advertising, insurance, wages, if you're paying someone to help you. And at when you subtract the expenses from the gross profit, hopefully you end up with a net profit. So I'd also just like to, give you this list. Like I said, the PowerPoint's coming home with you, but there really are some general tasks that every small business owner should be doing on a regular basis. Like we've talked about, checking your bank balance, getting in the habit of reconciling your bank account monthly and your credit card monthly eliminates that from a huge end of year task. And it also helps you identify if there's been any fraud. Closing out sales monthly, that's what gives you an idea of how your business is doing. Identifying and classifying your expenses. Knowing what you still have outstanding at the end of the month so that you know where you are with your cash flow. If you are using contract labor or vendors that supply a service for you, collecting your W-9s along the way in case you do need to issue a 1099. Maintaining a customer database is really great for all small businesses. Understanding your contributions and draw, that number can go positive and negative throughout the time that you own your business. And then down the road, you may need payroll. You may need to understand payroll taxes, and you may need to understand sales tax. So our action items for you at the end of this class, as we close out, is making sure that you have a business bank account and a business credit card. Making sure that you have access to all of the reports in your POS system. If you are using Square or Toast or Shopify, there are many out there. Learn about all of the reports. Take that time up front. Identify the revenue, expenses, and fees, and make sure you have that all identified correctly in your platform. It's also a really good time to evaluate all the ways that you are accepting money or spending money. Many of these platforms come with fees, and if you don't use all of them, it would be a good idea to just cancel them and work with the one that works the best for you. Monitoring your bank account and reconciling your accounts. We've talked about thinking about your revenue and cost of goods and trying to determine if your items are profitable. Also identifying your key expenses. Just really having a clear understanding of your business. The shorter time you keep track of, the easier it is. So in the beginning, if you can try and close your books out weekly, then you really know where you are, and then you can move to monthly. I really wouldn't ever suggest waiting more than a month to reconcile and close out your accounts if you can get into that habit. So we will take any questions, and I do want to put this contact information up here. We are here to answer any questions, or if you have questions post the presentation and the templates that we shared. Excuse me, there's a link here for the templates. So if anyone has questions, feel free to unmute and we would be happy to answer them right now. Oh, all right. Well, thank you so much. And we will be, we will send out other workshops through Eventbrite, and actually we'll add that to the follow-up email. Unless, Cassie, do you have any other ways? Okay, just double check.
No, following us on Eventbrite and also following our social media, we do publish a lot about upcoming events, whether they're through CIC or our partner organizations.
Thanks, Cassie.
Mm-hmm.
All right. Well, thank you very much.